Thank you. Okay, so we're here to talk about how to get and manage finance in business. Essentially, we're hoping that this session would be able to help our followers, our listeners, understand a bit better how they're going to keep that money that they've raised and how they're going to actually get that money in the first place and what is expected of them when they start. Okay, so a little bit about us. Amona Consulting Nigeria Ltd is made up of consultants that work together for our clients over the last 2 years. We bring experience spanning over 100 years if you combine all of us, but most of us have an average of 15 to 20 years work experience in several sectors. Our major focus is to be able to help businesses gain traction and profitable growth as they focus on fundraising, process reengineering, and also strategic development so that they can, and of course, because we know that once you have your processes right, your strategy right, you're more attractive to funders. And finance raise essentially for us is part of our process flows. Here are some of the companies that we've worked with in the past, and we're hoping that as you work with us, you continue to be part of our family of CEOs, as we like to call the companies. Our team, like I said, this is a snapshot of some of our core team members, and Mr. Gbadamosi is our trainer for today. He has over 20 years experience in varied sectors, such as investment banking, financial services, logistics, infrastructure development, real estate, construction, and of course, management consulting. He wears many hats. He's an entrepreneur as well, and has been able to raise over 50 million for key property and infrastructure development projects in the last few years. And that's why we believe he is the best person to come and talk to us in this regard, because he's done both. He's been able to guide people to raise money, get them ready to raise money, and also raise money for himself and his project. So he's the best person here. Labo is currently Group COO of GLS Group, Director as GLS Offshore Holdings, and he's the Executive Director and Founder of Harmel Franklin Resources, and of course, one of our dear consultants here at Amona Consulting. So I'm going to hand the baton over to Taiwo, so that because we want to be able to know you a bit better. And we would like a poll. We would appreciate if you could answer this poll. This poll is essentially about getting to know you better. We are, and as we're taking the poll, I'll tell you a little bit about myself. My name is Lola Sheonwo. I was trained as a pharmacist, registered with the Royal Pharmaceutical Society of Great Britain and Pharmaceutical Society of Nigeria. I own a telemedicine service, and I'm the principal consultant here at Amona Consulting. I'm passionate about making sure that we have 100-year-old, 1,000-year-old Nigerian and African businesses, hence why we focus on processes in businesses currently. So we have, the poll has been put up by Taiwo. Thank you, Taiwo. Would appreciate if you could just quickly answer some of the questions so that we are able to better understand, and Labo would essentially streamline the training to this. We've only got 2 people out of 8 right now that have responded.
Okay.
Nigerians are doing Nigerian timing. Yes, because we had.
Thank you. So is the poll up now? Is it up?
Yes, it's up.
Okay.
Yes, the poll is up. 2 people have registered. We have 2 more minutes for the poll.
Yeah, I think it's disappeared off my screen, but that's fine. I'm sure the results will come back up.
Okay.
Yeah. Right.
I think we can end the poll now. I know we said 3 minutes, but I think most people have registered. Okay, people are still registering.
Oh, registering to get on the web.
No. Well, yeah, people are still coming as we're talking, but I think doing the poll right now.
Yeah, we'll give it another few seconds and then we can start.
Yeah. Okay, Taiwo, are you ending the poll now?
Some people just came in, like 5 people were just allowed in now. So I think some people have taken the polls.
Okay.
Yeah. I think I can end the poll now.
Okay, let's end the poll and so that will.
Okay.
Thank you. And as please feel free to put questions in the chat as we go. We're trying to make this as interactive as possible so everybody goes away with more knowledge rather than less. So right now, Labo, I'm not sure, can you see the poll?
Yes, I can see the results of the poll. I think we have 60% of the people that answered. Their revenues are between 500 to 1 million monthly. And then the 40% is less than 500K. And then manual management of cash flow, mostly. Somewhere in between weekly and monthly for most people that manage to review their financial statements, and some don't. And we can cover that, a little bit later as well.
So
okay.
That's why we were asking this question.
Yeah. What are the biggest challenges in securing funding? Okay, great. This is a big one. Lack of collateral. We'll talk about it. Poor credit history, especially with the banks.
Yes.
Difficulty in finding investors and lenders. There's actually a lot of money out there. It's just the connection of the money to the credible businesses. So there are certain things that need to be done by the businesses to prepare for the money. And sometimes investors can't see that. They don't find that. So that's
Yeah.
where the disconnect is.
Yeah.
Also, a lot of investors have been burnt in the past. So sometimes they'll be like, well, we trusted these businesses and, they didn't manage their finances. Hence the topic of today, which is getting financing and managing the financing.
Yeah.
And I think it's just 4 questions, right?
Yes, that's it. Those are all the questions.
Yes. I mean, I really like this last question because it more or less just describes the fabric of what we'll be talking about today and where we need to pay the attention in terms of just attracting funding generally. So, all right, good. So
and I'm tired of hearing the Nigerian narrative of people raising money and then there's as we say now spending.
Yeah, and then they foreclose on the businesses.
And I think a lot of that happens because they don't actually even understand what to do when they get the money.
Yes.
Okay.
So I mean, I'll dive into it. If you want. Okay. Thank you very much, Lola, and thank you to the Amona Consulting team. Thank you very much for inviting me, and welcome to everybody that's on this webinar. I will spend a few minutes just going through a few slides. I think these are the slides, yes, just to talk about, business finance, talking about getting financing and managing the finance, all for the purpose of growing your businesses. I think we all know that one of the biggest challenges that any entrepreneur will face or can face or face today is raising money. While this is not direct financial advice, because I don't know anybody's or any of the company's financial situation, I think at the end, Lola will touch on some of the services of Amona Consulting and some of the services that we can offer to your business. So I'll just start with this slide. So what is business finance? I describe business finance as the lifeblood of a company. You need money to operate a business. It's just as simple as that. You can describe it as the management of the company's financing. You can describe it as raising capital, but ultimately for a business to thrive, you need funding for that. And why is it important in business for companies to learn how to manage finance? There's several things. One is you need to fund your operations. You need to invest in, for example, stock. You need to position in certain ways for decision making. So managing your finance is so important. Even as a company that has not raised money before, in order to attract investors, they need to be able to see that, okay, over the last 1 year, 2 years, 3 years, this company or this entrepreneur has been diligent and been disciplined enough to manage their finances. They have monthly statements, they have regular meetings, they have regular reviews. For some of the older companies, you want to see audited statements because that's at least by a certified. Sorry, there's a bit of an echo on someone's system. Yeah, okay, all right, I think it's better now. So yes, that's the essence of business finance. It's critical because it supports your operations, it supports your growth and overall positioning for an investor, and of course, the success of the business. So if I go, okay, sorry, I couldn't see the slide. What are the different types of business finance? I remember Lola and I were having a conversation some time ago. I think, Lola, at some point, we're probably going to have to do like a whole webinar on the different types of finance itself, where we delve down into the different types. But for now, I'll just do an overview of what we've put out here on the slides. So there's different types of funding. You can attract debt funding for your business. Typical debt could be loans from banks, from other lenders, from finance companies. Mostly, if you want to get a loan or some type of debt, you would require collateral. And I think someone already punched out one of those in the poll. Loans can come in form of term loans. They could be lines of credit. They could be overdrafts, which allows you, of course, to spend more than you have in your account. But again, most of the time is also collateralized with against your cash flow or your receivables. So for example, if you have expenses of, I don't know, 1.9 million naira every month, but you only have 700K in your account, but you have 10 million naira coming in as receivables, a bank could look at those receivables if you have credible contracts with those vendors and actually give you an overdraft on your accounts. So they will actually give you a line so you can cover your expenses. And of course, they will now deduct that amount once it comes into your accounts at a fee or at an interest. The second type of financing is equity. Equity is typically funding into your business for ownership in the business. So you have either, and there's different types of equity, by the way, and I'll cover that as well. You might have angel investors. Typically, angel investors come in with you at the very beginning of your business. You know, they like your idea, they believe in you, and then they give you some little money where you can start your business. Venture capital funding, mostly equity as well, typically would invest in already established businesses that has some sort of cash flow and has been running for, I don't know, 2 years, 3 years, 4 years, sometimes even longer than that. You also have crowdfunding. Crowdfunding is basically raising funds from a large number of small investors who you may not necessarily know. I'm aware of one company in Nigeria. There's a few companies in Nigeria, but a friend of mine actually runs a crowdfunding platform that does a lot of, that raises a lot of money for small businesses. And some of that information we can share later, in the presentation. Also, of course, the first form of equity financing is bootstrapping, which is basically you and just using all your saved up funds or sometimes friends and family to just grow your business up to a level where you now can attract some of those angel investors or venture capital firms as well. 3, you have grants. These come in form of, how would I describe that? I think grants come in form of, they can come through government agencies. It could be non-profits, but it's for specific purposes. And some companies that do it as well also do it as CSR. So for example, you could get a grant from the IFC, for example, because it's a women-owned business, or it's a minority-owned business for a specific purpose. There's typically a cap on the grants, and the aim of the grants is to get your business up to a level, again, where you start to attract more capital, equity capital, or some sort of debt financing as well. So yeah, that's that. If I give an example, excuse me? Sorry, I thought someone was saying something. So if I give an example, Lola read my profile. So I'm Group CEO and co-founder of a logistics company. I remember we wanted to do a project, and we had done the whole proposal. This is probably 12 years ago. And the IFC was actually quite interested. I've mentioned IFC. They were one of our investors, very early investors. They said to us that for them to invest in the company, that we needed to go and do a market study, an extensive market study that was going to cost $200,000 at the standard at which they wanted it. So we started applying to different organizations. The IFC eventually funded that and actually gave us a grant to do the study, because that now became the doorway for them to now invest in our business. So grants can come in all forms and shapes. Amona Consulting has Amona Consulting has consulted with a few companies that have gotten grants. So again, if you're an entrepreneur here, at the end of this webinar, it's worth having a conversation to see, first of all, what sector your business is in and what is available for you in form of a grant that you can get that can enhance your business and actually prepare you for the big money, if you're looking for big money, you know, or for whatever. It might be that you're just looking for working capital, or generally how to position your business to attract such funding. So I think we can move to the next slide. So those are the different types. So yeah, we can go to the next slide now. Thank you. Okay, so this gives a summary of how to access finance. I think I've mentioned some of this already. I've spoken about the funding sources or types of investment or types of business finance. First, you can get bank loans. Again, getting bank loans, you don't just walk into a bank and get a loan. You know, there's several requirements from a financial institution for them to be able to give you money. Again, I think two of those that come to mind immediately is collateral and your track record. Your track record really matters. So even if you have collateral, sometimes the banks actually won't finance you. So you can say, oh yeah, my house, or I have some land or a car or whatever it is, or I can give you this. But they want to also know that you actually run the business, you know, for a year, for 2 years, you've generated revenue for them to be able to do that. I'm assuming some of the people on this webinar are already running businesses or maybe thinking about starting a business. So it's important to bear that in mind. You also have, like I mentioned, angel investors. They typically come in early. You have venture capital. They invest in already existing businesses that have some sort of cash flow. It gives them the comfort to actually put more money into the business. I spoke about crowdfunding already. Again, there are people that you don't know, they just really like your idea and they have a strong conviction that, okay, I really like that. It's a cause that I like. And they will drop the 1,000 naira or 100,000 naira or 1 million naira as part of a fundraise of 20 million naira, for example. There's other funding sources that may not be capital directly, you know, so you want to talk about incubators where people that set up, companies that set up incubators, you actually use their resources to get your business up to a certain level that now prepares you to start attracting actual capital. So an example, again, if you don't know, it would be an incubator where you can use their office space, you can use their accountants, you can use their lawyers. Typically, what would they want in return? Again, a share of your business, some equity. So those are people that come in very early. Yes, so that's that in terms of, you know, where to find money or funding sources. Again, we can speak for like 3 hours on this. You know, it's so vast, but this is just a summary, and I'm sure there's other webinars that we will run in this regard. How do you determine the right source, you know, for your business? Again, it depends on what type of business that you run. I think depends on what stage you're at in the business. Are you just starting up? Are you a startup? Are you been running for a couple of years? Do you have proof of concept? Do you have some track record? How well do you understand that sector? You know, do you understand your competitors? Do you understand your growth trajectory? You know, how and where do you see the business going? Can you scale the business? You know, is this solving a problem? Is there a need in the market? You will find investors that appeal to such businesses, depending on what stage you're at and your understanding of that particular industry. So yes, you know, again, you will hear me say things like market analysis and understanding the sector interchangeably, because ultimately for an investor to look at your business and say, I want to put my money in your business, they're thinking about the returns. And what guarantees the returns is being able to generate income, being able to manage your expenses and generate profits and value for yourself and for the investor. That's it, you know, just in simple terms, that's really it. So yes, and of course, how do you prepare your business for funding? I've mentioned a few of this. You need a strong business model, a business plan, you know. Again, you have to talk about how you're going to scale the business, your understanding of the market, your understanding of what you do and the value that you offer is very, very critical. And investors will be looking at that. I think one of a few things that maybe are not on here, you know, which I'll mention later, is also who's the person that actually running this business. So you might have a brilliant idea and maybe you're not the person to run it per se. And then you now delve into, okay, so who do I need to bring on board? Maybe I need to bring someone that's very good at marketing, and that person becomes a co-founder. I need to bring someone that's very good in operations if you're not good in operations. So an investor doesn't just say, yeah, great plan, fantastic projections. They'll look at like, what, you know, who else are you working with? Who else is part of your team? You know, you're not very good. You're good at numbers, but you're not good facing customers. You need someone that can face customers. So there's a mixture of things apart from just financial, you know, that actually prepare you for funding. And of course, financial statements, having management accounts, being on top of the numbers. In the poll that we just did, you know, some people manage it manually, Excel. Some people might actually be really good at managing their business finance, but they don't have a formal way of managing it. And this is where you talk about how, you know, you start to embrace some of the technology that's out there right now. You almost don't have to do anything except just be disciplined, you know, these days, because there's literally an app or web platform for everything that you can have you can have your entire business, even if you're doing hundreds of millions of naira or billions of naira or 1 million naira. You can have apps. I think in some of the slides, Lola, there's like, I think we mentioned Zero and Zoho and all that stuff, but we'll come to it. So in preparing your business for funding, those are the critical things that need to be in place. Business plan, financial statements, understanding your market, and just diligently just staying on top of the numbers. Like, it's, you know, I've done business now for, I don't know, 17 years, and I've been working for, I don't know, almost 25 years. Trust me, I've been on the side of just giving people a hard time because just the documentation is not right. And I've been on the receiving end of my documentation not being right, you know, not prepared, you know, and having to go back and then tweak this, tweak that, do more work, rerun the numbers, do a HR plan, do a plan for operations. You know, if you're operating a warehouse, or you run a logistics company, or you run a bakery, or you sell, or you do e-commerce, you know, how do you operate? You know, where are your processes? You understand what I'm saying? Investors look at all this. They don't just look at, oh yeah, this is the returns, fantastic, let's just give them money, you know. So that's very, very important. What's the next bit? I think we're done with this slide. Yes. Okay. All right. So yes, we talked about the importance of having a financial plan and having a robust financial statements, being able to review it frequently. Why? Again, a business, if you describe it in, maybe except for tech now, even though you still have to make a lot of investment in the actual technology. But if you take a brick and mortar business, for example, you potentially have to invest in some assets. So there's capital expenditure that you have to invest in, even if it's software. There's a lot of money that goes into just building a platform. For example, if you do insurance technology or financial technology, or you run a supermarket, for example, it could be anything. Sorry, there's a bit of an echo. Okay, all right, gone. That financial plan is going to include what you spend on those assets. It's going to include what you spend on your operating expenses. Operating expenses is your salaries, your expenditure on marketing, on paying your vendors. You have to pay for internet. You have to pay for phone lines. You have to pay for water, utilities. You have to pay for stationery. All those little bitty things. You have to pay interest on loan payment and on loans that you've gotten from the bank. So it's very, very important that there's a plan for your business, a financial plan for your business. As I'm sure you have to or already have a strategic plan for your business. There has to be a lot of attention paid to what you plan to do with money, and how you spend money on a daily basis. It also speaks to some of the personal habits that even as business people we need to develop, or maybe we've already developed it. So someone that's not very good with money just in your personal life is unlikely that you will manage your business financing properly. So frivolous spending, if you're not spending within the budget, which is our next point, by the way, really, really hurts business. There's the message that goes around, like debt kills businesses. If you don't run your business personal financing very well, it's very, very unlikely. So apart from talking about this is how to manage your finance and business, I think everybody should look at, what you even do personally, because it's those habits that actually get transferred to your business and determines how and whether your business can grow, how and whether you can manage funding. If they say, listen, here's 100 million, here's 10 million, here's 2 million investment, how are you going to manage that money? If you don't have a plan, it's impossible. How are you going to guarantee the returns? So next bit is budgeting, which I think underpins finance and business. It underpins everything. There are times, of course, you have to invest in something and hope it turns out well. But I think at the rudimentary level, a financial budget is so, so crucial. In my business, in November, we start doing a budget for the next year, and we spend almost 6 weeks going back and forth on what we should spend on. Should we on the projections for the year. What other business do we think we can get? Okay, this year we think we can do 20 million this year. Okay, great. What's the cost of doing that business? It comes in around 10 million. 10 million. Why? Could it be lower? It can't be lower. But if we spend a little bit more, we might get more income. Then you now run the scenarios to see, okay, all right, after that, then you now have all your earnings before interest, tax, depreciation, amortization. If you have hard assets and all that stuff, you have to now back out. Then you now see the bare bones of your numbers to see, do I even have any profits, to pay back to investors, to retain or pay as bonuses to some of the staff, or to I advise, if it's a new company, reinvest in the business, reinvest in the business. There's no need for you to be paying any bonuses the first 2, 3, 4 years, frankly speaking, in my opinion. Especially if you have a plan to grow your business. Not that you shouldn't pay your employees or anything like that, don't get me wrong. But I'm just saying that if you have a goal to go from, doing 10 million a year to 20 million, how would you get there? You have to invest money in some of that. So creating budgets is very, very, very critical in business, excuse me. I've put down a few points and I'll just touch on that. It helps with resource allocation, when you budget, because you've already said, okay, all right, we're going to spend X amount on utilities. We're going to spend X amount on business development and marketing. And what is the return on some of that, some of those expenditure? It helps you with setting some of those goals. It helps you with risk management as well, because if you have a budget, you know exactly how much you're spending, what your operating expenses are. You know exactly, okay, every month I'm putting away 50,000 naira just as, for emergencies. That's part of risk management, because like if you have an unexpected expense, it means if you've done that over 2 years, that's, I don't know, what's 50 times 12? My math is failing me right now. That's 600K. If you've done it for 2 years, you have 1.2 million, right? That you can just like, okay, here's some money I can use to cover that. And if you're smart about it, this money, you would have put it into an interest-bearing account. So when it goes in there, you actually have more than 1.2 million in there. So that's something to bear at the back of your mind, to always think about having that emergency fund or a slush fund, whatever. People call it different things. It's the essence of budgeting and being able to control your costs. It helps you with decision making. If there comes a time you have to make an investment, a capital investment, again, I'm referencing businesses I've been involved in. For example, if it's a supermarket and you get to a point where it becomes too small, you want to open another one. If you've been saving some money, it means potentially you can now afford to pay rent on another property and start to build that up, because you've been able to save some money and control your costs where you're at. Financial control is very, 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 very critical. I think the discipline to look at your numbers like almost every minute, it's and I say this to myself as well. I still run businesses, and we're quite the way we look at the numbers, some of the employees are like, guy, but just relax a bit. I'm like, no, sorry, we don't have to pay for this. Can we pay in 3 weeks' time? Can we have the service? But you know what? Put this in the cash flow, because if you do that, we need to pay salaries, we need to pay this, we need to pay for this license, we need to pay for that. So managing that entire thing is really, 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 really critical. And if you don't have a budget and a plan, most of the time it will catch you unawares, and that's what exposes. Lola, you were going to say something?
Yes, I was going to ask you a question.
Yes.
Because I keep getting asked this, right?
Yes,
so
please.
With your banker hat and your entrepreneur hat now, you separate, and why should you separate income for yourself and income for the business? So how have you been able to do that? So there's no double dipping, if you see what I mean.
Okay, it's I think I'll talk about my logistics and infrastructure business. Where at the beginning of the business, we went through almost 2 years of due diligence, and this is where the preparedness comes from. We were paying ourselves peanuts, frankly speaking, me and my partner, because we were using savings to fund the business. When we went through this due diligence and what's the IFC required, they're asking for your great-grandmother's date of birth and where she lived in Ibadan, 400 years ago or whatever it is. That's kind of taught me as an entrepreneur, even though I knew it, yeah, Because on the other side, right before then, I was the one like signing and like disbursing investments and telling people, sorry, your document is not good enough. Sorry, bye, hang up the phone type of thing. So transitioning to that and now listening to someone tell me that, and some of these people were like really young as well. Like, oh my God, young analysts are telling you like, sir, sorry, you have to resubmit this, you have to resubmit that. But to your point, when we went through that, we had to do the use of funds, what we wanted to use the money for. I think it took almost 2 months of going back and forth. And they're like, no, you can't spend all this money on trucks. What about your working capital? How long is it going to last? So we had to budget and now say to ourselves for a few years where we have to almost deprive ourselves, and actually manage this money that we've been given. But how did we bridge that gap? It meant that we had to do a lot more work to bring in business, to increase the income of the business so that we could start paying back and now start paying ourselves the way we should be paid. So in terms of managing that, it was just discipline, frankly speaking. It's discipline, it's being disciplined and knowing that someone has trusted you with funding. And being able to say, you know what, I'm not going to squander it. We're not going to like, take stuff for, I know people who like, got funding and then boom, launch new cars immediately. I mean, we see that already. We're in Nigeria, right? We see that, I know someone that bought a brand new house, 200 million from cash flow 3 weeks after he received funding. And then, of course, 2.5 years later, they closed his office.
Close the office.
So that discipline is very, 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 very crucial. Of course, you have to pay yourself. Of course, you have to take care of your staff and all that stuff. And that's the essence of looking at your company, knowing exactly where you are, knowing exactly where your finances are, and zero-basing everything and saying, listen, this is where I'm at, and building a plan to change that situation. So if you're not good at, being disciplined, it's a good time to start practicing it. If you need accountability partners, if you need to get a co-founder, if you need to get someone else on your board that's responsible for some of this financial decision, is what you need to do for the sake of your business. If not, it'll be a one-man business. You look good for a few years, 5 years, 10 years, and then the business is no more. We don't have a lot of businesses in Nigeria and Africa that actually transcend generations, talk less of 10 years, 20 years, 30 years. And it's because of this reason. It's because, once there's money in the bank, CEO, forget, let's go to town. And then you ignore the business needs, but you look good. And then you kill the business. But you then don't kill the business alone. There's employees that you're responsible for. There's families. Across the companies that I operate, we have probably almost 120 employees. So you can imagine if I make a rash decision right now, I just like this new car and I must buy it. And then I start owing salaries. And then I can't pay for medicals. And then we're not doing a lot of marketing. We're not doing a lot of business development. It's just a few months or a year down the line, people will resign and look for new jobs. And then the downward slope starts from there. I don't know what type of businesses that we all do here, but again, even if your annual turnover is 1 million naira or 10 million naira, it still doesn't matter. It's that discipline from being able to manage a small amount that takes you to the next level and to the next level. So that's that. I think did I answer your question, Lola?
I got distracted a bit by the chats.
Okay.
So
hopefully the people.
For that question, I think it's one question that a lot of people that are that's it.
Struggle with, yes.
Struggle
yes,
with
yes,
how
yes.
to how to keep both. So essentially pay yourself a salary, live
Yes.
within your salary.
Within your salary. That doesn't kill the business.
That doesn't kill
the, yeah.
Exactly.
Yeah.
And have a budget that you're
have a
holding
budget. You must.
Yes.
Yeah.
Accountable to, and have some people that you can hold.
Exactly. And if truly you want to grow your business, again, this is some of the work that, as Amona Consulting, we can work with you, we can help you with. You have to have that plan and that growth plan, that strategic plan. Even if you have that idea right now, by all means, could you look at your processes? Could you look at your plan and see how to augment that? So yes, that's that. Let's continue. Sorry, I spent a lot of time on that one. Okay, debt management. I think somehow we've covered a few of this.
Well.
Sorry.
So I think we've touched on it, but essentially, managing equity is easier than managing debt, I think, because they will give you for a while. You just have to be reporting.
Yes.
Whereas for debt, whether you make income or not, you have to pay the loan.
Exactly. And some of these points here on the slide, yes, definitely, try as much as possible and avoid high interest debt, or look for how you will consolidate, refinance, and start to pay back some of this. One of the ways to make sure you can generate enough cash flow is like, listen, how are you going to increase your revenues? Increase your revenues, you ought almost automatically have more cash and you can start to pay down some of these. It's also important to be able to not be overexposed, and not over leverage, because what happens is you get backed up into a corner, and banks or finance companies may come for your collateral. Even individuals that lend you money, for example, may come for your collateral, your car, your house, and all that stuff. So it takes a lot of delicate planning to make sure you have the right balance, in terms of the funding that you need for your business or for your business growth. All right. What's the next bit? I think there was a bit on. Okay.
Yeah. So this is. I think we've touched on this as well.
Yes.
This is okay. Now you've gotten the money, I guess.
Yeah. So yeah, if I touch on those first two bits, we've talked about, what needs to be, how you can prepare for that funding. And again, just from like funding that, I've raised for a building, like I've built 2 massive warehouses. I remember the investor asking for, business plan, all that stuff, and some of the details that I mentioned earlier. They want to see your projection. They want to see the return. They want to see how they're going to get their money back. They want to see and know you, who you are, who where you've worked, where you're coming from, because ultimately, yes, the business idea is amazing, but then they want to know the person, what does your team look like? What does your management team look like? Have you identified some of the risks, that you may face, and what are the mitigating factors for that? I know one of the major risks in Nigeria right now, I mean, everybody knows that, is currency. For example, if you're buying all your supplies in USD, and then 2 months later, dollar goes from 1,200 naira to 1,600 naira, you have to either increase prices. If you can't increase prices, all your margins are eroded. How do you deal with something like that? So it's important that whatever sector that you're in, you understand it, you know what the market is, you know what are the potential risks, and how. I think I may have gone into the next slide now. And you know exactly.
Can you touch a bit on the components of the pitch deck or the business?
Yes. Yes.
That's when you've attracted your funders or your investors. You've gone in, you've done angel networks, you've gone to friends and families, you're talking to them on what are the key components that essentially you should have ready for them?
Okay. I mean, again, I think I may have covered it a bit. Of your pitch and business plan, problem, solution, market opportunity, financials is as simple as that. It's well laid out here. What problem are you solving in the market? It might even not just be you. It might be like 20 of you, but then you have something that differentiates your particular product or your particular service. What's the size of that market, and what portion are you trying to bite in that particular market as well? I want, when we did logistics, for example, we wanted 5% of the market, I think we eventually got to like 3%, but then that 3%, there's a dollar figure in terms of what the revenues are. So understanding that is very, very important. If there's a problem and you have the solution, it means that's an opportunity for you. So how do you now package that? They want to see how you package it. What's your route to the market? How do you, what's your marketing plan? What's your biz dev plan? What platforms are you going to advertise? Are you going to partner with marketing agencies? How much does that cost? Is that already captured in your financials, in your budget? Because that's how you can now see, like, okay, from A to Z, I'm going to start here, and this is how I'm going to grow. In 2 years, I will, instead of my first year projection is 10 million, but in 2 years, I can double that, or I can increase the business revenues by 10% or 15% or 50%. Again, it depends on the sector that you operate in. Financials. There's no, we can't overflog that. You have to have your numbers right. You have to have your numbers right. All this bits that we're talking about, all these fancy, flowery descriptions, has to now translate into X amount, X cost, operating costs, operating margin, net profits. Where are the dividends? Where's the reinvestment? Okay, how much investment do you need in 2 years or 3 years? What are you going to use this investment for? What's the use of funds? Are you going to invest in capital equipment? Are you going to invest in technology, which is very critical these days? Investment in technology is very critical. Are you going to hire an IT person, or you're going to outsource the IT services? There's all sorts of decisions. Investors would like to see that you have thought everything through, because that way they have the confidence to say, you know what, here is X amount. We want to invest in your business. We want to give you some equity and own a piece of your business. And then you can start your negotiations, hopefully raise some funding. If I may, Lola, even though I know this is for another class, sometimes equity investors may also give you debt as well. So saying equity does not necessarily mean that it's always a slice of your business. Equity investors might give you equity and debt. There's also something called convertible debt, but I think let's go into all that today.
I think somebody has a question. He has his hand raised.
Okay. Yes.
Can we take a question?
Yeah, of course.
We're about to get to the poll. I think the next slide is a poll. Okay, no, not quite.
Where's the?
Okay, so it's Olusegun Ayo. Can you unmute and ask your question, please?
Okay, I think I can see the question. I think he said, how do we get to make for Naira payment for the dollar transactions? The example is buying a truck in dollars and making repayments in Naira. Okay. Frankly speaking, it's I don't think it's a question that can be answered. But I will attempt to, again, what I've seen a lot of people doing is benchmarking at a dollar rate. Yeah. Because it depends on what you benchmark at and the price you now charge for people that use that truck in terms of the income that you get, and leaving an allowance for if the dollar Naira rate shifts against you. So it's basically called hedging, So for example, if you're going to, while not overpricing yourself out of the market, it's a very, very delicate situation. I mean, we've seen what's happened in Nigeria in the last 1.5 years, December 2022, I think it was 2022, when I think dollar went to 2,000 plus or something like that, and then came down. It messed everybody's plans up. builders, businesses, everything, airlines, we understand, we all know what happened. So I think it's been able to do the hedging. There's a very delicate balance there, that you have to be able to speak with your investor on, and it translates to how you actually price your product in the market. We all know that prices have gone up, I don't know, doubled or tripled in some instances in the last 1 year, 1.5 years. It's because of this particular reasons, because you know what? There's a lot of our consumption in Nigeria and Africa as a whole that's just dollar-based. We import a lot of products and services. So it's caused the local pricing to go up so that we're able to service some of those, people that buy products. So you have a truck, for example, maybe you charge ₦1 million from the port, I don't know what kind of truck, the port to wherever it's going. You might have to put that price up because I'm sure there's other of your contemporaries that are doing the same. That way, you can at least be able to benchmark and make some of your dollar payments. So that would be my answer to that. Hedging.
Hedging, yeah, and you would think that a lot of the banks will have a lot more hedging tools for us to be able to leverage on, but
they're the ones that are actually after you and after all your assets.
Exactly.
They're after your assets.
Yeah.
Yeah.
But I think being aware of what's going on in the market and watching the financial news so that you're not caught out.
Market information is very critical.
And you can easily pivot quickly with regards to your prices.
Yes.
A lot of people right now, they've put on their invoices, this is subject to change, or their prices are only for 1 week or month maximum, so that you're not caught out and you can easily increase your pricing. That's what's happening in the retail side.
Yes.
I'm not sure about service that has to do with
service. Yeah. So yeah, it's very difficult. It's happening across board. Very, very difficult.
I have another question here that's saying that what role does personal credit play in obtaining business financing, and how can business owners improve it? I know now we now have credit risk agencies right now.
Yes.
We used to have them before.
I mean, personal credit is when you want to open a new account, for example, a business account. They don't just say to you, let's have your CAC documents and then boom, account is open. They actually do a credit check on you. They do a yeah.
They take 1,000 naira or something.
They do a credit check on you. They want your BVN. They want references. They want a copy of your ID, passport, and all that good stuff. And they have to check the profile of the person that is opening that account. So if you translate that to finance, personal credit is actually very, 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 very critical because, again, as I mentioned, it's more of a personal thing. If you start a business, they want to give money to the person behind the business, despite the fact that the business is a very good idea. It's going to make a lot of money. Yeah. So your credit worthiness is very, very important. Your personal integrity, very, very important in the finance circles. So if you owe money to maybe 6 different banks, and then you now go to Unity Bank, Kano branch or something like that to try and let's get a facility because all these other guys know me. What they will do is run a credit check, and then your name will pop up. Be like, no, red flag. So it's important. I mentioned this almost 30 minutes ago. Your personal financial habits actually do translate into how you run your business. And even if you're not that great right now, it's something you can start to learn because it's by being disciplined and being able to know, okay, where am I exactly as a person? If I owe money to banks or to individuals, how can I consolidate that? And you actually build a plan to get out of that. I call it the debt trap,
Yeah.
Debt being a DEATH sometimes, not just debts like money. you know, so it's very, very, very critical. You know, that's why banks will ask for references. You know, there's personal references, there's company references, because people can speak on your behalf or speak on your behalf to say, nah, don't touch him, you know. So that's very, very critical. So it's important to manage your personal finances. If you have debts, try and see how you can sort some of those out. You know, be vocal about it. Look for help. Look for financial consultants. Look for companies that offer some of this debt advice and all that stuff. At Amona, we can refer you to a few people if you're in that situation. But yes, before I keep talking, so Lola, please.
So what is the importance of financial statements and the analysis?
Okay.
When you're raising money, you could just touch
very, very, very critical
from a lender's point of view, and also as a business owner, how can you use some of these things?
Okay. I think maybe some of us may know what these mean, but I'll just quickly go through them. So, and financial statements, there are three key financial statements: income statement, balance sheet, cash flow statement. And the income statement basically shows the company's revenues and expenses over a specific period. So it could be a period of, you know, mostly it's a period of 1 year, or it could be a month, or it could be a quarter, or half the year. It shows how profitable a business is. So you might be doing 20 million naira, 100 million naira in revenues every month, but your expenses are like 99 million naira. And then by the time you do your depreciation, pay interest and all that stuff, you actually go into a negative position. So yes, we can see that you're making a lot of money, making a lot of revenues, but it's not a profitable situation that you're in. A balance sheet shows your company assets and liabilities and equity as well at any particular point in time. Again, it's presented as a snapshot of a company's financial position. So it shows like you have, I don't know, assets. It could be vehicles, like the gentleman that said, you know, you have trucks, that's an asset. But on the other side, if you've borrowed money to buy that, it will show that if you bought that truck for 50 million naira, it will show also that you have a liability to the bank or wherever you got that money from. So it shows your financial position. Cash flow statement basically measures the inflows and outflows of a company. It helps you understand how you use cash. And in talking about some of the ratio analysis, which again, I think on a different day, we can delve into the nitty-gritty of all this stuff. It shows your liquidity, for example. It's important to have that budget and have that financial plan. A cash flow statement will show you like, in 4 months, you're going to run out of cash unless you do something about it. Cut some expenses, generate more revenues, manage this better, don't spend on this, don't spend on that. It just shows how liquid you are and where all your money is going. It could be going into operating expenses. It could be going into capital expenditure, which means you're increasing the value of your balance sheet. Remember, we talked about assets. Yeah. So again, I keep talking about it, a balance between all these things. You can choose to invest all the money in assets and then you don't have any money to pay your staff. Yeah. You can't pay your staff for like 3 months, but then, oh my God, we have this building, we have that. They're all going to leave you and they will come after you. So there's a balance to that. And it's important to have that plan, have a growth mentality, like this is how I'm going to grow, instead of getting into a financial turmoil early on, which I'm sure we've all seen a lot of people do, a lot of people. So it's important to have that financial education, being able to do all this planning. And of course, again, all the data that we're talking about, the statements, all that stuff is what's going to help you make decision. Data-driven decisions. Sorry, go ahead.
So essentially, if you can't hire an in-house accountant, you should have an accountant that is giving you this information.
Yes, you can outsource that service. Yes, it can be outsourced. Yeah, because again, hiring someone comes with salary, medicals, insurance. You might have to pay their transport. If it's a big company, you have to buy a bus, coastal bus to transport them to wherever they live. You might decide to say, listen, let me just pay this 100K a month to a company that has weekly meetings with me and sends me at the end of the month my financials, you know. Or you can have, again, there's web apps that are available for some of these things now. It requires a lot of discipline to input some of your information, but trust me, it makes your life a lot easier. You can always see your financial situation on the palm of your, in the palm of your hands. You know, most of the time, you know exactly where you're at. So yes, so that's that.
And that's where the data-driven decision making.
That's where that get yes. Okay.
So this is the poll. I think we've answered some questions. Can you run the second poll? Maybe we should have kept the questions. Some of this.
Or you can just put them on the chat actually. Copy and paste. Oh yeah, it's up.
Okay, so yes, this is still trying to get to know you better, and so that the next set of slides we can tailor it a bit more to suit you. So please answer the poll. They're just 2 questions, so that we can shut it off in the next minute or so. Thank you. Just a little bit more time to give more people to answer the question. We only have 5 out of 13 people. I'd like to have it move up to like 8. So if I can have more than half answer, then we know we have enough to.
Right.
So this is how we do data analysis.
Yes.
You know,
make data-driven decisions.
Exactly. I love data. I think maybe because I'm a bit of a control freak, but if the numbers don't lie, if you have the numbers, you know where you are. I know a lot of people just look at what is left at the bank at the end of the month.
Yeah.
Maybe to see if they're profitable or not. I don't advise for that. I don't think.
Looking at the bank, what's left in the bank doesn't indicate your profit. No, absolutely not. Yeah.
And by that time, it's already too late.
Yeah.
Sorry, forgive me. Where is the poll? Sorry, have you sent it out already?
It's on the screen. It should pop up on your.
It should have popped up. Yeah, I saw it.
Yes, it's still up, I think.
Okay.
I can't. It only says poll 2. So what is it?
Yes, there's you should be able to click Taiwo.
I can't.
Oh, you can't.
Oh, you have to scroll down. Okay. Oh, that's strange. 8 people already answered.
Yes.
Maybe you can put it back up. Is there a way to put it back up?
Because we're seeing that quite a few of more people haven't raised funding yet. And a lot of people would need their money, obviously, to get more market share and customer acquisition. That means most people have their processes right and they just want to expand. And I guess that answers the question of increasing income so that you can improve cash flow.
Yeah. And you can increase income by, again, creating new products, new services.
Yeah.
There's also, it can be strategic partnerships, for example, partnering with someone that provides a service and then do an add-on to what you do.
Exactly.
There's several ways for,
So not just, for us in Amona, we keep maybe every 3 months.
Yes.
We go back and come up with another service.
Yeah.
That because we were talking to our customers, we're understanding what they need.
Understanding.
Yes, because
exactly.
most times you might think what you are selling is what they're looking for, whereas
they're looking for something else.
They're looking for something else. Yeah. Okay, thank you so much for the poll. I think we can carry on. So with the rest of the slides now. Ajo Balogun, I hope you are able to send your poll. If not, we can unmute you and you can answer the question. No? Okay. I'm going to close this on my page now.
No comments, Lola, no comments.
Okay, thank you. Okay, so I think I'm trying to get, it keeps popping up. So I over back to you, Labo. We were going to now talk about the post-investment management. What is expected of you?
Okay. Yes, thank you. Hold on, where's the slide? I mean, post, assuming we've all raised money, congrats,
Well, most haven't.
Most haven't, yeah. But so typically, once you go through all that stuff that we've discussed, all the hurdles of raising money, the process is actually slightly simpler after that, if you manage the money properly. I think what investors look for, again, I've worked on both sides. So, we put regular updates here. It even goes beyond that. Typically, there are some investors that once the condition for investing in your business, no matter how small, they have to recommend who becomes the CEO. So they actually put an implant in your business.
Yeah.
Because they know that it's a great idea, it's a great business, but you know what? We're going to have our own person manage the money, So for example, I won't be able to sign any checks, or you as a business, you can't sign any checks without the CFO that's been put in by the business. It's important. So apart from just being involved in some of the strategic planning and the business, sometimes investors actually put an implant in your business. It's important. Communication is very, very important. Anything that's going to be what you typically have, you have spending caps as well. So there's different levels whereby, so if I use our example, for example, I think we could sign up to $10,000. Anything above that, we had to, one of the other directors that was not an implant, but one of the other directors from the investor side had to sign it off. And then another level was at, I think, 25, where the chairman and one of the fund managers have to give an approval. So there's different levels of also spending. So it's important to be able to communicate to the investor to say, this is what this year looks like. This is what this 3 months, 6 months look like. We will be doing this, and this is the reason why. We will be invested in a truck. If I use Mr. Ayo's example, we will be investing in a truck Q1 next year. So they're already aware that, we're going to spend 50 million naira. It's already in your plan. It's important to keep documentation, again, the financial statements, consistent reporting is very, very important. So apart from, yes, communication, it's part of communication, but what are the numbers saying? What is the business saying? What is the market saying? How are things evolving? it's important to keep talking to the investor about that. Even if you need more money, there's investors that like businesses so much. You can tell them, listen, I need more money because where we're at right now, we can't survive 9 months. We're good for 6, 7 months, but we're going to need more money. But here is the business that's coming in. Here's the business development we've done. Here's the contracts that we've signed. And this is the potential revenues from this contract. It's happened to me. We've gone back to the investor and said, well, this month we can't pay you back, but we actually need more money. So you can imagine the audacity. That's because we had just signed a major contract, with a mining company. So they were like, okay. So the interest payments, you can pay it. The principal, we're going to roll it into this other fund. And then they added more money. So there's different ways. It's not all gloomy,
No, it's not. But I think it's also because they could see track record.
Exactly.
The transparency in your cash flow management, and the fact that you are also going and getting more work.
So
because if there's no growth,
no, they wouldn't have done that. They would have come after us 100%. 100%. So
and coming after is quite
coming after is I'm sure everybody knows what that means or might have an idea of what that means. So it's very, very, very important. There's other conditions that different investors put around communication and being involved. They want quarterly board meetings. They want monthly update meetings. They want it to be face-to-face. They want to visit your business. They want to talk to some of your clients, all sorts of different things. Everybody's different. It also depends on what type of investor, because there are some that are more stringent. If it's equity or if it's debt, the debt guys, you got to be very careful because you have to pay back the money. I mentioned convertible debt earlier. If you get convertible debt, how that works is they give you debt, equity, and some of the debt is convertible. It basically means that if you default on some of that, they can convert the debt into equity and literally kick you out of your business. So there's all sorts of things, if you don't make the payments, So I think that's planning and running the business diligently with discipline, and sticking to a plan for growth is very, very important, and making sure your numbers are always on point, making sure you have your statement, you review it with your finance person or your external finance company or whatever is very, very important. All right.
So now we're talking about risk in finance. You raise the money, what risks and how are you going to, what are the risks, what could happen and how do you mitigate? And how does your investor or the financier think about you when you're coming back to raise more money, for example?
Okay. On risk, there's different types of risks, that you have to consider. And ultimately, even though there are different types of risks, we talk about currency, market risk, it could be regulation, it could be operational risk. All of these risks have an effect on your ability to generate income. It has an effect on your ability as a company to even, have a good profile. So being able to identify those risks and mitigate some of those risks is very, very important. So I'll use an example of a consulting that we did for a large agribusiness group, at Amona. Market risk, for example, is there was a lot of competition for for some of their products, and what the clients now did was start to, they had a farm, they had a bakery. What they now started to do was to focus on producing slightly higher quality products where there wasn't any competition there. So potentially, instead of playing at a level where you're charging 10,000 and there's like 100 competitors, they basically increased the quality of their product and they could charge 12,000 naira and 11,000 naira, which was less competition, and then it's more volume, not more volume, but it's more revenue because it's a higher price. Okay. Another, I've mentioned currency fluctuations and all that stuff. It does affect your finances. If the cost of your goods go up, what do? You might have to dip into your savings or your emergency fund as a business. But again, being able to have a contingent plan to say, listen, I'm going to save money. I'm going to hedge, like Mr. Olusegun, I have to hedge at a rate that's higher than whatever the current rate is so that I can make my repayments and examine how I charge in the market and make sure that while it's not lowballing myself, it's also competitive and I can still get business, because if you don't get business, then you can't even make any repayments. And then there's several other risks that affect your business. It's important to be aware of it, to monitor policies. Some of you might be in businesses that need licenses, or have a regulatory interface. It's important to be on top of the regulations changing, in your business. It's very, very important because all this eventually affect your bottom line. I hope I've answered that to an extent. Yeah.
I don't know if anybody has any questions. Please put in the chat box.
Yes, please, if you can.
At the end of the webinar training, and some checklists just to summarize.
Okay.
Over to you, Lam.
Where? Oh, okay, yes. Yes, I'll do this on my laptop because I can't see it. Okay. Again, we won't stop overflogging this. I think that's what I would say. It's health checklists. This is very, very important. Like the very first poll that we did, I think that was quite revealing, and I'm happy that we did that because, like we said, some businesses don't know what's going on in their business. They just know that there's money in the bank. I can pay my salaries. I can get my products, or this subscription is coming, and that's it. It's important to monitor, what's going on with your finances. It's important you know exactly how much you spend a month, how much you generate. It's important to do that budget. That financial plan that includes your budget is very, very important. And then monitor it like a hawk. It's very, very important. Every $1 or $1 is important. It contributes to your bottom line. Manage growth sustainably. Again, in different ways, we've touched on that. You want to have a plan. One of the businesses that I'm involved in, we wanted to invest in all this equipment, and it was a lot of money, millions of dollars. And then the investor said, listen, is there a way we can actually phase this? Yes, we have this available for you guys, but then if we put all this money in, and then it takes you almost 2 years to even get any clients to use this equipment and all that stuff, it means, so why don't we buy X forklifts and 2 trucks, start the business? The essence of that is that you at least start the business. You start generating cash flow. I know Lola is a big supporter. The first question Lola asked before she says good morning or good afternoon to anybody is like, where is their cash flow? Are they generating money? Have they started?
Because it's so much easier, because there's a story to tell.
There's proof of concept. There's the fact that there are customers, there's clients that actually trust your product or your service, and sometimes it doesn't have, it might be an online business or whatever it is, but at least you have money in the bank. You can see a cycle. You're spending on this, you're generating this. It's important to manage that and know that, okay, in a year, in 2 years, in 6 months, we're going to do another injection. We're going to make capital expenditure. We're going to invest in, Mr. Olusegun, I keep using your business. In 2025, Q2, we're going to buy 2 more trucks because the 1 truck you have now has generated enough money for you to do a down payment, of up to 50% on 2 trucks. But you can imagine buying 3 trucks now, and then you start paying your investors back immediately. There's no moratorium. Potentially you will be so stressed and you will be like, maybe I need to sell 1 truck. Meanwhile, you just bought the truck. So having a sustainable plan is also very, very important. That growth plan. There's nothing wrong with your trajectory being like, very, very steep. So far you are prepared for it. But if you're not prepared for it, if you haven't prepared for it, so that's 2 different things. If you're not prepared and if you haven't prepared, it's 2 different things. For that, it could actually get you in a lot of trouble. So so that growth plan is very important, and sustainable growth till you get to a point where you attract financial partners that just want to pour money at you to say, listen, let's go, and they hold your hands. They give you the resources and the money. Monitoring your key performance indicators is very important. For those of you who don't know what key performance indicators are, they are basically indicators on how you measure your business. So it could be financial indicators. So in terms of, you have revenue targets, I want to generate 1 million naira this month. By week 1, you haven't generated anything. Week 2, you generated 200K. You're already 50% behind. Being able to monitor that to say, what's wrong? What am I doing wrong? What am I doing right? Let's keep doing that. What else do we need to tweak? Being able to look at your business to say, okay, we need to take a different step so that we can meet some of these targets. So you can have revenue targets as a KPI. Operational efficiency for people that, I don't know what businesses we all do here, how efficient, is your operation? How productive, are your staff? If you talk about HR, for example, turnover rates. So if you have employees and every month they always live in very high turnover, it means like your business is a bit shaky. Everybody works with you for a month or 2 and then they leave. It means there's something there. Employee satisfaction could be a KPI. I also wrote down sales and marketing. If you do business development and all that stuff, what percentage are you converting on a monthly basis or quarterly or on an annual basis? So those are all KPIs. Those are all things that, at Amona Consulting, we can help you build some of those plans, very willingly. Yes. So that's in terms of tracking the KPIs is very, very important. The investors will be looking at all this as well, because, as part of your business plan, as part of your growth plan, as part of your financial plan, you would have communicated all this, that you're going to do all these things. So it's up to you to monitor and make sure you can report positively to the investors. They can see that, okay, the money is working, things are changing, things are improving, they're getting more revenue, they're hiring more people, there's more business. You know what I'm saying? Maybe they need money in 2 years, we can give them more money, So the sweet conversation starts. And of course, this, we've talked about this, it's managing growth sustainably helps you avoid over leveraging your resources. It's very simple. How you want to scale, make sure you have a plan for how you want to scale the business. Again, scaling the business sometimes doesn't require money. An e-commerce business that decides to say, I need to scale, doesn't mean you have to go and spend extra money. You might partner with Lola that owns a warehouse in Lekki and now decide, listen, we're going to be partners. I'm going to store my goods with you. But then if we do joint marketing, it's going to attract a lot more people and a lot more clients. It means I can store more stock with you and I can grow my business. So sometimes it's not just money, but how you scale your business could be financial, it could be strategic partnerships, it could be hiring more staff, more strategic staff. For a very long time, we didn't have a CFO. There was a finance manager, in fact, senior finance manager, but not a CFO. A CFO thinks strategically.
Yeah.
Bringing a CFO on board was now someone that I could talk to directly about, listen, man, we need to change pricing. We need to reduce pricing to do this and all that. But the finance manager, he was just about consistently, I'll do my reports. He was an accountant. I'll
Yeah.
send you the reports. The
Yeah.
reports, there's no issues with it. It's correct. I'm doing bank reconciliation. I'm
Yeah.
doing this. I'm doing that. I have my checklist.
I'm chasing debtors.
I'm chasing receivables.
Yeah.
But a CFO is a more strategic person. Now, that is part of a growth plan. Your personnel, investing in personnel. So there's all sorts of things, all sorts of factors that affect this. And I will stop there because I will keep talking.
Labo is very, very passionate about raising finance, investments, as you can see. So for us here at Amona, these are some of the services that we offer. You can also reach Labo through us if, for example, you want to strategize and reprogram your finance strategy, for example. So how, because obviously it's not a one size fits all. When it comes to raising finance, you have to think about who the best lenders for you are.
Exactly.
What kind of, should you have a mix of debt or equity? Should you be looking at convertible debt, for example, and things like that? So if it's, you can reach out to us. Our phone number will come up shortly. And for anybody that fills out the, we have a feedback poll coming up now. And we would really like to know, because we like to, and this is something that we also advocate that you do, we check with your customers all the time and get feedback from them so that you can use the information to grow. So we're going to have a feedback poll now. Taiwo, please put up the feedback poll. And for everybody that fills the feedback poll, just put done in the chat bot and we'll send you your voucher, 25% off any of our services that you would be interested in. We also have our solo to CEO training, which is more bite-sized for those that are just beginning to start to grow their businesses, and you can do that on your own time. Taiwo, we're waiting for the feedback poll. I think he's dropped off. Oh dear. Okay, I think the feedback was just 2 questions anyway, so maybe you could just put it in the chat, but that would be really great. What did you think of the training, and how do you think Mr. Gbadamosi did? And my own interjection, I wasn't supposed to really speak, but I can't help myself.
No, it was nice for it to be interactive since we couldn't talk to everybody.
Oh, okay, so we have it up.
Yeah.
Thank you, Taiwo. Yes, please, just 3 questions. Please let us know what you think so that we know how to improve on our content. And please put Don in the group chat. Can everybody see the poll? Really appreciate some feedback. Thank you. I have 1 out of 9 participants. Could we please get it up to like 6? That would be
20.
Essentially, a lot of people seem to have thought it was excellent and learned a lot. But I would like to have more feedback. And I'm not seeing Dawn in the chat, so that we can send you a voucher, or put your email address in the voucher in the chat bot, and we'll send you a voucher just for attending this free training. Okay, we have a couple more minutes on the poll. And then we just open the floor to a few questions before we round up. Thank you, Lola Shone. Please, your email address so we can send you a voucher. Taiwo is can you? I think somebody's trying to get back in. I don't know if that's possible.
Yes, I'm here.
I think someone is trying to get back into the webinar.
Oh. Okay.
I can't see anything. Okay, speaker was excellent and engaging. What other topics? Scaling a business. Digital marketing strategies is 50%. Okay, should we end the poll? Are we ending the poll now? Okay, thank you so much, everybody, for your feedback. Okay, I'm going to close this now. And I think the next slide is question and answers. So if anybody has any questions that you pertaining to, we can take one. I think we have time for Labo, do we have time for 2 questions? So maybe people are having issues in their business and they want a specific.
Yes, I mean, I think anybody that has a question, I'll attempt to answer that.
Okay.
Yes.
Just raise your hand and that would be fantastic.
Yeah.
And like I said, please don't forget to send your any questions.
Sorry. No?
No, not looking like it. Oh, wait, hold on. Okay. Taiwo, please check. There's an email in the group chat already. Oh, yes, Eunice Ajani, yes, you did miss a poll. It was about feedback on the course. And that was the last one. But right now we're just trying to see if anybody has any questions for their business that they might want us to. It doesn't have to be finance. It can, I mean, we're here, we're business consultants. We can take, you can get free consulting. We have 10 more minutes and yeah, 10 more minutes and then we'll end the course. Okay, I'm not. Any questions? You can raise your hand, or if you're shy, you can just put the question in the chat.
I think most people left as well.
Yeah, I know. We're talking quite a bit.
Yeah, it went on for.
I think both of us are quite at what we're passionate about.
Yes.
So we do, if you want to do a business health check, like we said, we're giving 25% off on the business health check. And you can scan the QR code or email Taiwo at Amona Consulting with any more information that you might need. So if you, any questions? No questions? Okay, help boxes. Are you saying something? Do you have a question?
No.
No. Okay. Okay. So should we go, can we say we can wrap up? Thank you very much, everybody, for taking the time. I'm glad you had good feedback for us. I'm glad everybody liked the session. Please follow us on our social media handles. We're always sharing tips, as well as motivation and some talks and that we find interesting. So we scroll. I'm always putting things on the stories, on things that I find interesting on for me myself, on our stories. So if you follow us, you probably see a lot of that. Thank you for taking the time. And unless Labo has anything else to share.
No, I think I'm good. Thank you. Thank you for joining today. It's been a pleasure, and thanks for inviting me to do this talk. Where, as Lola mentioned, we're very passionate, and we are available to partner with you, consult for you, look at your businesses. If you want to raise funding, we can offer some advice. So yeah, please do let us know, and thank you very much.
Thank you, and wait to hear from you. God bless.
Thank you.
Bye-bye.